Hey everyone, me Kevin here. This video is sponsored by Masterworks, but more on them in a moment. First, we've got to talk about how the Federal Reserve and what the Fed just said today, in my opinion, gives us the license to see Bitcoin hit 120K and 10K Ethereum. I'm going to explain exactly why in this video. Let's get right into that. First, I believe, based on surveys that I've done and research that I've done, that at least 40 to potentially 55% of individuals who invest in cryptocurrencies or cryptocurrency assets do so because they see cryptocurrencies as a hedge against inflation. They see real estate out of reach, which is a traditional hedge against inflation, at least leveraged real estate is, and they see that fiat or just holding dollars is obviously not something that is going to hedge you at all against inflation. If anything, you are most exposed to inflation holding on to dollars. In fact, you're more protected from inflation in the stock market than you are holding cash. Obviously, cash is nice for opportunities, but hey, why not, instead of hold cash or holding cash, hold cryptocurrencies, which are also extremely liquid, that you could use for opportunities as they present themselves. For example, if you're going to hold cash to go buy stocks on the dip, you may as well hold money in cryptocurrencies and then buy certain stocks if they dip after earnings or whatever, if you wanted to preserve your wealth, your cash wealth, and protect it from inflation, while at the same time having the liquidity to go purchase something in the event that there's a dip. Obviously, that works well, unless, of course, Bitcoin or Ethereum are all of a sudden plummeting, which entirely could happen. But that's the benefit of Bitcoin or Ethereum, is because there's volatility. The goal is that you would make money and be protected more from inflation. But what did the Federal Reserve just say that actually gives us a license to see Bitcoin and Ethereum run substantially? Well, it is actually a wind behind what I've been talking about all year. And that is that I think 2022 is going to be the year that cryptocurrencies really take off. I think that's when we're really going to see a push for a real Bitcoin ETF, not a futures ETF. I think that's when we're going to get actual stablecoin regulation, which will be bullish for the market, in my opinion, because it should help us limit excesses of leverage, which I understand the traditional banking system has lots of leverage as well. I get that. But we want to make sure that we're not like 10 times as leveraged as the regular market, because then we could be really building cryptocurrency valuations on, sort of toothpick foundations. And I don't like investing in things that are on toothpick foundations. I like companies or assets that have really solid foundations and then fluctuate and hopefully in the long term go up in price, right? But anyway, that philosophy aside, the Federal Reserve is essentially telling us a few things. One, they told us that inflation is not under control. They said that we're working to get inflation under control. So in other words, they're telling us right now inflation is not under control, which many of us already knew that, but it actually was uttered by the Fed today, that inflation is not under control. They also say that they expect inflation to last until Q2 and Q3 of 2022. That means anywhere between April and September of 2022 is when we would expect to continue to see inflation until. And my expectations are that even when inflation starts ticking down, we're still going to have higher wages and higher rents that are going to have this sort of lagging inflationary impact, pushing inflation up even more. Now, we could potentially see crypto do really well the first 9 months of 2022, and I'm bullish about that. I do think that it's possible crypto markets are going to start trying to price that in, starting even this month or December of this year, trying to price that expectation in. But we could potentially see a downward catalyst for cryptocurrencies when that inflation starts inflecting down, as individuals potentially see less of a reason to be in cryptocurrency, at least those individuals who are using it as an inflation hedge. Obviously, if somebody's in something because of an inflation hedge, or their goal is to hedge against inflation, and inflation goes away, then it would make sense that they would be sellers of something that's otherwise their inflation hedge, right? Like when inflation goes away, maybe you dump gold and you take it and you go buy some other assets, like tech stocks or whatever you want to do. So while I do think we'll have that shift, I do think it's going to take not only going to take longer, but when that shift starts coming, I think that shift is not going to be a dramatic drop in inflation. I think we're going to see a little bit more of kind of a slow bleed out of inflation because of the lagging impact of wages still going up and of rents still going up. The next part of this video is sponsored by Masterworks. I'm really excited about what I have to share with you here. You all know that I've been tracking trends of investors pulling money out of the stock market, hedging against inflation, and warning of market crashes when we see catalysts in the market. Remember, folks, when we see trends in the market about people getting nervous about inflation, they specifically get nervous about high yield growth stocks because they have to discount those potential yields, which means they take money out, right? In fact, some top equity firms are now projecting real returns of potentially less than 5%. Even Cathie Wood is suggesting this compression happening, and Morningstar is predicting a potential negative growth cycle for some stocks. Now, this isn't to say that they are right, but it's something to take into consideration. There are arguments here on both sides, but there's an asset class that you may not have heard about, which by some measures has outpaced the S&P 500 by 174% from 1995 to 2020, which is incredible considering the historic bull run that we've already been in over that time. So to outpace would mean we'd have to have even a better return. And what's interesting here is that that's almost double the appreciation of real estate, gold, and 90% of cryptocurrencies during the same time. And that asset is contemporary art. And unlike other assets I mentioned, just about nobody is talking about contemporary art because it has been traditionally difficult for small investors to get started. Most retail investors can't go out and buy multi-million-dollar pieces of art to diversify their portfolios and protect their portfolio in different ways. Masterworks, who kindly sponsored today's video, allows retail investors to own a slice of artwork themselves. Masterworks.io has emerged as the only platform taking billionaire art collectors head-on and letting you access their exclusive investments. Simply put, you can now invest in the very same art they do, with names like Banksy, Monet, and other iconic artists for just a fraction of what they pay to purchase these artworks. All you need to do to add these assets to your portfolio is visit Masterworks.io, create an account, browse their latest artwork, and invest in any of their current offerings. Just like you would trade stocks on your smartphone, you could do that at Masterworks.io. From there, you can either hold your shares until Masterworks sells the painting or sell your shares on their secondary market. In fact, investors have already received a 32% annualized return from a 2020 sale of their Banksy Mona Lisa. That's a pretty impressive return. Anyway, check out Masterworks.io. And thank you for sponsoring today's video. So what's a strategy for investing around all of this? Well, in my opinion, here's my strategy. My goal is to be about 8 to 10% crypto as a tool where I park money either when I'm saving for taxes or I can't find any good stock deals. So for example, if there's no good stock that I can see that's selling for a big discount, park 8 to 10% of my money in cash, but rather than it actually being in US dollars, I'll have that in crypto. So that'll be Bitcoin, Ethereum, and Cardano. Those are the big three that I'm parking money in. I do own some smaller amounts of different altcoins, but these will be my big core positions. So like 95+% will be these core positions. Then what we'll do is, as I see the inflation potentially start inflecting down, I'm going to really want to pay attention to, have we hit some new highs, and are there going to be opportunities to potentially take profits? So that way, let's say I put 10% of my stock trading portfolio, or let's say I put $3 million aside for cryptocurrency cash that I have sitting on the side, and for opportunities where I'll sell the crypto and buy stocks when opportunities come up. If that crypto becomes more valuable, let's say it goes up by 30%, and all of a sudden I have $3.9 million, I'm gonna probably shave that extra $900K once we start seeing inflation turn. And then, only when I start seeing inflation turn, will I actually move that extra crypto to cash. But I'll only start shaving as long as I'm not on margin. If I'm on margin, that's different. For me, margin is like get rid of borrowed money, like be out of margin, but I have no margin right now. So the rest will go into crypto until I see inflation starting to rotate down. Until that happens, it's going to make sense to, in my opinion, continue to focus on the larger core cryptos for the bulk of your portfolio, Bitcoin, Ethereum, Cardano, maybe Solana even. And the rationale behind that is, as much as it's fun to trade some of the smaller tokens, I wouldn't put a large portion of my portfolio in. I'd probably put somewhere around that same thing like I do with stocks, 5 to 10% into shorter term trades. And hey, if you hit it really hard and you double or triple, you take that money out. then take maybe half of that or 3/4 of that gain, start throwing it into that Bitcoin, Ethereum, Cardano, Solana pie. That way you're diversifying, and then go play again. It's kind of like going to the park. Hopefully you win big, bring back, load up your other core positions, and then go back into the market and try to go shopping again for that opportunity. Kind of a strategy I have, but in my opinion, this move by the Federal Reserve to essentially admit that inflation is out of control right now, that they expect it to go down in between Q2 and Q3, but in the meantime, they're going to continue to print money until probably June of 2022 when the taper completes. And they're not even certain they're going to raise rates at that point. It's all going to have to do with what inflation does at that point. Well, it's possible, in my opinion, that cryptocurrencies just continue to do well up until that point. Now, no guarantees, because the market likes to try to anticipate inflation going down. And in that moment, when we see inflation start trending back down again, we'll probably see a little bit of anchoring on the price of cryptocurrency. So, in my opinion, a lot of crypto price right now is not going to be related to stock to flow, but in the short term, it's going to be related to inflation. And we do have CPI data coming out soon. So let's see, CPI data release. And let's look at expectations as well for this. I think that'd be good. So the next CPI data release is actually pretty soon. It's coming out November 10th. That's going to be CPI data for October. Remember, they always report 1 month behind. So November 10th, that's next week. Wednesday, actually, is when it comes out. So 1 week from today. And then we're going to get a report on what inflation is like for October. We know that inflation came in a little hotter in September, but we did also have more COVID shutdowns. We have seen some costs start coming down, like used autos have come down a little bit, but they've also been kind of fluctuating back up. We have seen lumber push back up, but that shows up in things like the producer price index and not in the consumer price index, which is just another thing that kind of adds to a little bit of confusion because you do have these different measures of inflation. I really think they try to almost confuse us on inflation, which is kind of annoying. But anyway, let's go ahead and look at the expectation. So if you have not yet, mark your calendar. November 10th is the day that you want to mark your calendar. If we get a big beat on inflation numbers, I'll probably buy crypto. Like, my goal is going to be to sit there right at 5:30 when that inflation report comes out and then buy or sell crypto based on what I see happen that moment. So I'm going to be sitting here with my Coinbase and I'm going to be ready to go. All right, so 10th, CPI month over month. The survey is showing an expectation for a 0.6% increase. That's up from 0.4% last year. A 0.6% increase, if we hit that expectation, that's a 7.2% annualized inflation rate. That's very high. This expectation is that this inflation report is going to come in high. And if it does come in high, I think that's going to be a bullish scenario for crypto. Even if it misses, if the expectation is this high, it would have to miss dramatically. But anyway, CPI at 5.8% year over year is the expectation. That's not the annualized month over month version. And then it looks like we're expecting CPI without food and energy to be at 4.3%. These are all increases of around 8% from last month. So the expectations are very high for inflation for the October report. We're not going to get any inflection point this year on inflation. It doesn't look like. And Jerome Powell himself said we're not going to see, real moderating of inflation until the middle of next year. In my opinion, bullish for crypto. Bullish sign for crypto. So we'll see what happens. Very interested to track what happens as well over the next few days as we lead into that inflation report. But right now, the expectations are definitely high. So these are my thoughts on why the Federal Reserve has kind of given a license for cryptocurrencies to do very, very well over the next year. And folks, we'll see you in the next one. Thanks again. Bye.